Welcome to Sir Lancelot's Real Estate Roundtable, your guide to mastering the realm of real estate in Central East Florida. I am Sir Lancelot Leonard, ready to uncover the secrets of seller strategies, home staging, mortgage mastery, and more. From Daytona Beach to Cocoa Beach, Lake County to St. Augustine, join me as we navigate the intricacies of real estate. As the leader of the Sir Lancelot Group at Florida Homes Realty and Mortgage, I'm here to arm you with knowledge and innovation, whether you're a seasoned homeowner or a first-time buyer, unveiling the kingdom of real estate, one roundtable at a time. Welcome back to another episode of the Real Estate Roundtable, where we bring you the brightest minds in real estate finance and investment strategies. Today's guest is a true game changer in the world of wealth preservation and tax strategy. He's helped countless investors, business owners, and high net worth individuals keep more of their hard-earned money by leveraging powerful tax deferral strategies. He's the founder of Capital Gains Tax Solutions, a thought leader in Deferred Tax Trusts, DSTs, and the host of multiple successful podcasts, including Build It to Billions and Capital Gains Tax Solutions podcast. If you've ever wondered how to legally and strategically defer capital gains taxes while maximizing your investment potential, this is the episode for you. Please welcome the expert in wealth preservation and tax optimized investing, Brett Swarts.
Lancelot, what's going on? Thanks for having me.
Thanks for coming on the show. So guys, imagine this. A successful real estate investor, after years of hard work, is ready to cash in on a multi-million-dollar property sale. But there's a problem. A massive capital gains tax bill looms over the deal, threatening to wipe out a significant chunk of the profit. That's where our guest, Brett Swartz, steps in. Like a financial strategist in the midst of battle, Brett has helped countless investors and business owners sidestep to tax pitfalls that could have crippled their financial growth. Through innovative tax wealth preservation tactics like the Deferred Sales Trust, he doesn't just save clients from excessive taxation, he unlocks doors to new investment opportunities. Today, we're going to dive into the strategic moves that separate those who simply make money from those who build generational wealth. Brett, let's start from the beginning. What inspired you to specialize in helping investors navigate the complex world of capital gains tax deferral?
Yeah, I saw my friends, family, and clients lose half or all their wealth in 2008, crash in real estate. I was in one of the biggest boom bust cities in Sacramento, California, and it was painful. In fact, one story comes to mind is a gentleman named Steve, and I sat down with Steve. He had about $50 million worth of apartment complexes and rentals, and he was over leveraged, he was overstressed, and he was overworked. But he also had taken on a lot, not only just a lot of debt, but he had a huge, massive gain. He was building this machine of wealth. We watched the Rich Dad, Poor Dad, read the book, the Purple Book, and we're like, this is the way. I mean, he's like, living the dream. I'm sitting there going, man, this guy's the man. But then we sat down with him and found out that he's like, we're like, dude, we think we should probably sell it. The market's pretty hot right now. This is before the crash. And he's like, yeah, but if I sell, I have all this capital gains tax and I'm going to get crushed. And he goes, also, I have all this debt. I don't even know if I can really qualify for these next deals. And I think I'm just going to keep holding where I'm at. Well, fast forward, he lost everything. He lost all of his wealth. He ended up getting foreclosed on his primary home. He lost all of his apartment complexes, and he went bankrupt, and he ended up getting divorced. And, it brought me back to a young age when my parents got divorced. You see, my parents also had a lot of wealth growing up in the Bay Area and building houses and rentals and such. And, I saw wealth crush families because my dad didn't pay child support, and my mom and my brother and I, could, barely had a car. And without my grandma, we would, I don't know where we would be, right? So we moved with my grandma, and we, so 90% of the time I had, let's just say lower income type of growing up. My dad was great. He always taught us how to work hard, but he wasn't great about paying child support. So he had all the Harleys and the boats and the Corvettes. And so I think at a young age, one of the good blessings of all this is the good Lord instilled in me a desire to not have wealth come in between families and not, hurt people, and figure out ways to be strategic about your wealth with timing. Timing and be able to sell when it makes sense and diversify. And unfortunately, the 1031 exchange is just not our friend, Lancelot. It's just it can be a real enemy unless the deal makes sense, right? And we're seeing it happen today, right now. Interest rates that are being readjusted on a lot of these properties, and people are sinking the ships along with higher insurance. But But people overpaid, and they kind of knew they were overpaying, even a couple of years ago, like they did in the, before the '08 crash. But they felt because of the capital gains taxes, they must do this 1031 exchange and they must compete for these deals. And so they put themselves in a compromised position. And then, like Warren Buffett says, the tide comes out and you see who's been skinny dipping, right? So we're in that situation. So that is what happened in '08. Now, I was a newly, fresh real estate agent, commercial agent working at Marcus and Millichap. So I was on the front lines of helping people buy and sell investment real estate, do 1031 exchanges. We thought we were the Navy SEALs of this whole investment world for real estate, but we got humbled as well. And so imagine I was sitting, it was about 2009. I remember I was sitting in, it's like a Thursday, it's raining outside. All these deals are falling apart and no one's making any money. Like we're all sitting there going, man, our clients are, panicking and hurting. And so a gentleman comes in and speaks about this strategy we're going to talk about right now. And basically, it's like this could have saved all of the pain. This actually could have put him in a great position. So I did what every real estate wannabe does. You get a side hustle to keep the lights on because I wasn't making any money at real estate. I worked at Cheesecake Factory nights and weekends, and my wife and I had a new baby girl. We moved with my brother into a small condo, and we cut our expenses to the bare bones. And I worked nights and weekends at Cheesecake Factory, weekends basketball tournaments, and then also by day I'd still negotiate with banks and try to help my clients out of their mess. See, they were losing millions where I was just trying to make hundreds or thousands in a month, right? And that's when I learned about the strategy. And fast forward, I was able to retire from the Cheesecake Factory. We have 5 kids now, and I just help people build these capital gains tax exit plans without using the dreadful 1031 exchange. and it works for businesses, Bitcoin and primary homes and real estate. And we're having a great time helping a lot of people.
That's awesome, Brett. Hey, let's break it down for those who are not familiar. What exactly is a deferred sales trust, a DST for short, and how does it revolutionize tax deferral for real estate investors and business owners?
Yeah. Yep. So it's a structured installment sale, or you might know it as like a structured seller carryback. Right? Your listeners might be listening where it's a great way to buy a deal where you get the seller to carry the financing, right? And you can get in with no banks and maybe even a lower down payment, and it's like good terms. So as a buyer, it's fantastic to negotiate that. And on the seller side, they have an advantage in the sense that they get to defer the capital gains taxes. The number of reasons why the traditional seller carryback is not great for the seller for a regular buyer, but the concept is always great. Defer, right? Income tax, capital gains tax, and then only take in what you need or want in a given year, and you get to compound your wealth. And so what we do is we set up a business trust. That's a third party. We're the trustee of this trust, okay? And we have the seller sell to the trust right before the trust sells it to the buyer. So let's say Lancelot is the buyer, and let's just say we just did a deal in Massachusetts, an $8 million business sale, okay? And Lancelot, you're the buyer for $8 million. And the seller's selling for 8, 0 basis. They get like 2.5 million of tax. And like, oh my gosh, I built this whole thing up and I'm about to give 30 or 40% of the proceeds away. And then boom, the trust jumps in and says, you know what, before you do that, let me buy your position for 8 million and give you a promissory note. And we structure it like 7, 8, 9, 10% is the interest rate.
Yep.
And it's 100% financing. And then the trust turns around and sells it directly to the buyer. So there's 2 sales right away. And so the trust buys and sells for the same price. So it has no gain. And then the seller hasn't had any payments, so they're in 100% deferral. And that's basically it. We go invest the funds wherever they want, real estate funds, real estate lending, stocks, Bitcoin, whatever they want to invest, we diversify it. Then they just live off of the interest typically, and they got the full amount working for them versus, 5.5 million, they got 8 million, right? And that's the simple part of this whole thing. But the best part is you can be an entrepreneur. You can go back into your own deals, right? So like the business owner, what's so powerful is we give you the flexibility to multiply and compound your wealth.
That's insane.
Yeah.
My friend, that is insane. That's like the golden nugget here.
Yeah.
Everybody listening, hopefully, this is the stuff. That's cool. And let's go to, are there any biggest mistakes, that what people make when they're selling highly appreciated assets, and how can they avoid leaving millions on the table in unnecessary taxes? And this is one of the ways I know. Is there any other way that you?
Yeah, there are. And let's just first talk about the biggest mistakes, right? The biggest mistakes I think people make is they don't get really clear on what their dream is for their 1, 3, 5, 10-year plan. what their dream is for their family mission, vision, values, what their dream is for how the wealth of this exit is going to have a legacy and compounding impact for generations. I mean, exiting multiple millions of dollars of a business or real estate or Bitcoin, this is generational, changing opportunity here to make a huge impact and have tons of freedom for your family and give to causes you believe in and all of these things. And I think sometimes, the entrepreneur may take it for granted that, or the real estate investor who's done really well, that maybe not everyone has these opportunities. And yeah, they probably worked hard and were strategic and did all these things, but man, the government's about to crush you in tax, right? And so the mistake is not having a clear dream of where you're going and your vision for that. And then two, figuring out what the obstacle is from what's getting you in the way, right? I'll give you an example. We had Warren and Catherine selling a multifamily property for $2.5 million in Sacramento. And their NOI is about $120,000. And, they have the toilets, trash, tenants, termites, but they actually have really good tenants. They're 100% occupied, but it's still taking up that time and that energy. And everyone knows that pool where you're like, man, I'm stuck between, I should be maybe traveling more with my family, or maybe I should be, starting this next business venture, or maybe even just going bigger for my next part, or maybe just retiring and getting some more time. But this property, it's doing so good and it's producing cash flow, but it's still taking my time and my energy, right? And so there's this tension there between it's good, but is it really what it's going to achieve? That could be the obstacle. So don't trade what's good for what could be great, right? And so this is what the conversation I had with Warren and Catherine. I said, well, what do you really want? And they go, well, we have 2 twin daughters. I said, well, tell me more. They go, well, they're 10 years old. I go, okay. I go, well, 10 to 18 is our years that we have the most with them. And we want to travel and we want to spend time with them. But Warren is spending every other weekend driving 2, 3, 4 hours back and forth out in traffic. So like 6, 7, 8 hour day with the property. And he'd like to not do that. Oh, well, great. Well, what's the challenge? Well, if we sell this property, we've already 1031 into it, so our basis is low. We're going to pay this massive tax. I said, okay, well, let's develop a plan. Let's build a plan that frees up your time. That sounds like that's your big thing. That's an obstacle, freeing up your time. Yeah. And then your dream is increase your cash flow. Yes. Okay, great. So enter the Deferred Sales Trust, right? We build a plan that exits net of all closing costs. It's about $2.35 million out of the $2.5 million sale. And then we defer all the capital gains taxes. And then guess what? We increase their NOI from 120 to 190. So he's like, well, you're telling me I got an increase in cash flow. I have no more tenants, toilets, trash liability. I was able to pay off my debt. I could defer my capital gains taxes, and I get to spend more time with my 2 twin daughters.
That's a no-brainer.
So this is transformational for families. People are just like, this is Netflix. I've been stuck in Blockbuster 1031ing, right? And I thought that was the only way. I had to trade 15 problems for 30 problems. I don't want to trade 15 problems for 30 problems. What's the point, right? Like truly passive income is to your freedom and impact that compounding interest is to your money. So where Robert Kiyosaki stops, he says, get financial freedom. And eventually on that right quadrant, he says, money for money, right?
Yeah.
But there's all these other quadrants. Well, if you're already there, get out and just literally get truly passive, right? Time is too short to be sitting around, not spending and doing the things that you want to do for your dream and your family, right? So we unlock that transformation for families, but it starts with them getting very clear on their dreams.
So a side note, do you have a number where somebody could exit and get financed like $500,000, million? What's that? Like a decent number where a person could say, how can I make the cash work for cash and I could step back?
Yeah. So let's start with what we typically can return. 8, 9, 10% compounding net of fees is our general rule of thumb, right? That we can return. Yeah. Now we've unlocked some deals recently and are paying 16% on debt. So we're actually doing a little bit higher on our interest rates now on our promissory notes. So the first thing is that, for every $1 million, let's just say it's 10%. Well, that's $100,000 of passive income. So then you do the math and say, well, when does it make sense for the deferred sales trust? We found at least $1 million net proceeds, $1 million gain per transaction, with the exception that if you have 2 at 500 each, you can combine it into one. Yeah. So the trust, you can do as many exits as you want basically into the trust, and you can get multiple promissory notes. But we found that it really scales at about $1 million net proceeds, $1 million gain per transaction. So that's the short answer. But again, it works for Bitcoin, businesses, real estate. So you might have 500,000 of Bitcoin and you might have a $700,000 real estate property. Well, those two combined are 1.2 million. Sweet. You'll get 2 notes, one for 700, one for 500. Now you're above those 2 thresholds. You're in a nice spot to really scale and compound this trust to be able to pay you back.
And then the trust basically carries on with the family, correct? So let's say I am the founder of the trust, but my kids are in the trust after, I pass away or before I pass away. And then they carry on the trust. They do the same exact strategy that I've done previously, correct?
Yes,
Like
they
getting
carry on
this
the
right.
promissory note. It's important to understand, Lancelot, right? What they own is the promissory note.
Yeah.
If the seller owned the trust, it'd be taxable. The trust owes them the money. So these are single entity business trusts that only do business with the seller. And you're the owner of a promissory note. You're the bank.
Okay.
And so your kids can step into your shoes and continue the tax deferral and then receive payments and slowly pay tax. And so that's what most of our clients do. They just live off the interest payments,
Yeah.
and they just slowly pay tax and they let the principal be intact, and you can go for as long as you want.
That is awesome. That is awesome. And then that trust lives on, hundreds of
Yeah, I can
years,
go for as long
whatever.
as you
Yeah.
want.
Yeah. Yeah.
This is
Yeah.
generational type of stuff. And
It's
you
so
can set
cool.
parameters inside your living trust to say how much, when, and how the kids can be taking from the note payments.
Awesome. So let's talk about today's shifting market and landscape. How can investors, leverage tax strategies to protect their wealth while they're capitalizing on real estate opportunities?
Yeah, the biggest mistake people make is they think it's all about cash flow. Cash flow is king, cash flow is king, right?
That
And
was my saying too. So now
hey,
tell
and I'm
me.
not saying it's not about cash flow, but the way that we say it, we have it in my shirt. I don't have it today, but it says tax flow, not just cash flow. Okay.
That's a good one.
So it's what's called a 3D investor mindset. Most people live in 1D or 2D. Okay. So there's cash flow. That's one of the pillars. There's tax flow, the most important pillar. Okay. And then there's debt flow, the one that gets underestimated and then comes back and really bites you. Okay. So what the 3D investor does is they look at everything with those three parts of mindset. So the mistake is being in a one set of mindset instead of all of the other three, right? Okay. So practically speaking, the method that you implement is when you look at deals, you're looking at obviously how much depreciation can offset. That's a big part of it. B, how much does it cash flow? That's important. And then debt, is there any risk that I have for some debt that's going to reassess? I'll talk about a deal doing right now. It's a $14 million exit for a client out of Sacramento. It's an apartment complex. They have a zero basis. They've done what's called the cash out refi piggy bank, where they use the property to cash out refi tax-free while you own it. But what happened is their 3% interest rate is about to jump to about 6.5, 7. And so what they've been doing this cash out refi for so many years, they're about to get crushed because the sinking of the ship is going to happen. They're going to be negative cash flow, or they need to sell it. And that's when all of this depreciation, recapture, and ordinary income tax comes back. And imagine selling for 14 million and then getting a bill based upon a $7 million income tax, but you don't have the money because it's already been pulled out all of the years that you've already spent it. Okay.
Yeah.
So you've got to have this 3D mindset. Okay. What's my cash flow? What's my debt flow? What's my tax flow? And then how do I solve that problem before I make any decisions? And so we have an amazing solution for this where we do a partial 1031 into a Delaware statutory trust. So this answers kind of your other question before.
Yeah.
Where this is like a structured syndicated 1031 that works for investment real estate. So we'll do that piece of it, and we'll do it into an Amazon real estate coupon deal, we call it, meaning it has a very high loan to value ratio, which replaces the debt, the 7 million over the basis, which is 0. And so what we need to do is we need to first do a debt flow surgery. And that means we need to replace the debt. So we do that, and that gets rid of the debt flow challenge. Non-recourse debt, it takes about 15-20% down payment of that 7 million, but that does the debt flow. The next thing is the tax flow, which is the capital gains tax deferral, because his gain is 14 million, right? And in California, it's about 40% of that. So if you think about it, had he not have our strategy, after he pays off debt and closing costs and pays taxes, he has nothing left. With us, though, he can get the debt out of his name, get the debt flow taken care of, get the capital gains tax deferred the way that we do it with the Deferred Sales Trust, and this equals into the cash flow, right? So after everything mixes, he'll have about 5 million in the trust approximately, and then we'll earn somewhere around about 10%. So he has about 500,000 per year, about 41,000 a month. So he went from basically being, call it, underwater and then losing his property, if he just had a cash flow mindset.
Yeah.
Or if he tried to do a 1031, good luck, because he has to buy something at 14 million or greater. and take on the $7 million of debt or greater, which what you had was what's called a negative arbitrage situation going on, where you're borrowing at like 6 or 7 and your cap rates are still maybe 5 or 6. And it's just not a lot of rent growth and a lot of appreciation. So all of those things are not great. This is why a lot of deals have been stalled out and there's a lot less transactions. So we solve all of this problem and we literally transform his life. He no longer has any toilets, trash, termites, a California rent control and nonsense that's going on out there. And he has about 40,000 a month, truly passive. And these are the things we're doing. And like you look at this and people's heads explode. It's all about structuring and having a 3D, tax flow, debt flow, and cash flow mindset.
We need more of you out there.
Hey, you can't unsee what you just heard or saw, right? You need to be on the front lines of this. And you need to know, because otherwise, this Doge, you look at Doge, right? Look at what they're uncovering. Not only is he's literally just being, fraudulently spent away our tax dollars. Yeah. And it's really sad to know that we have 36 trillion and maybe, I don't know, half of that has just been completely plundered with it's like, pirate ships taking all of our gold and just passing it out to all of their friends and the different backroom deals. It's a disaster. And so we believe that we're in the fight of the reverse Tea Party. It's happening right now, Lancelot, right? And this is 250 years, since, America was built, and we fought for tax, representation without, with tax, right? Yeah. And now we have the biggest wealth transfer in the history of the planet happening, 84 to $100 trillion. And there's, 10,000 baby boomers turning 65 every day. There's about 80 million in the US alone. And if it wasn't for us people keeping the capital in the hands of us people, that's going to create jobs, which actually is a good thing, because there'll be more tax revenue for the government, and build housing, attainable workforce housing, so we can end the housing crisis, like 84 to 100 trillion. Or it gets in the hands of the government, and guess what they're going to do? They're going to waste it and fraudulently, do things that they shouldn't be doing. So we're in the battle. This is the front lines, and we've got to all kind of band together and educate and use every legal means possible to keep the money in the hands of the people.
Yeah, I want to join your team. I like it. It's awesome. Definitely. So we touched on a little bit about, what's the difference between DST and 1031. Can you elaborate a little bit more about that? I mean, 1031, 3 months, nominate your properties, et cetera, et cetera. I guess that's the base of it, but you probably know a little bit more than I do.
Yeah. So a 1031 member only works for investment real estate. It doesn't work for a primary home. It doesn't work for a business. It doesn't work for Bitcoin. Our strategy works for all of those, right? Bitcoin, businesses, primary homes. We did a luxury primary home out of Palo Alto. We're doing another luxury primary home out of Miami here coming up soon. We've done business sales, Bitcoin, Ethereum, other coins, so cryptocurrencies. So ours works for everything. That's the first thing. Number two, you have no restrictions, and so you don't have to be put in a box for the investment allocation. So you can also, with our strategy, you can invest into any asset of any kind at any time. So diversification is two-front. It's not just diversification within asset classes. So stocks, bonds, mutual funds, real estate, businesses, lending, crypto, Bitcoin. That's diversification of asset classes. It's also diversification of time, meaning dollar cost averaging, and or just waiting for the market to shift on certain industries to be able to invest into. So ours gives you what we call the Netflix version of it, meaning anytime, any asset, at any point. Like it's very seamless. Whereas the 1031 is just the opposite. It can only go into investment real estate. It has to do within a restricted period of time. It has to take on equal or greater value of debt.
And like kind.
It has to be like kind, right? Yeah. So it's Blockbuster. You have to show up and return the video or DVD in 30 days. And, this is 45 days to identify. And you can only only do that. I mean, only do real estate. And I love real estate, but I love real estate when the timing is right. In fact, we've loved lending in real estate for the last 2.5 years. When people are still overpaying, we were lending on it. Right. And we've been getting double-digit cash on cash returns when people are losing out. So this is the mindset. We did a $13 million deal in San Diego for a car wash developer exit, business and real estate. He had a $4 million basis. So we deferred it all. He was so smart. Part of the capital went into Bitcoin at 40,000 a coin. We're like, 98,000 a coin right now. The other amounts went into lending funds, multifamily making 10%. The other amounts went into some stock and diversified. And so, and then we've been buying some stuff at a discount. And so he's he's really smart and we're really, we're executing on the strategy. And then he's waiting for the land values to drop. And then he's going to turn around, sell those at a gain. The trust, though, will be able to absorb that and typically not pay any tax at the trust level. Then he'll turn around and he'll go buy the land at a discount and go build more car washes. Right. And so he's waited 2 or 3 years, because the reality is the real estate market takes about 3 years to go from the bottom to the, from like the low back to normal is generally what it takes. So that's what we're doing. We're just timing it. So I think the other one would say is, one of the upsides for the 1031 is you get a stepped up basis. And so our trust, our 1.0 version, there's no stepped up basis. So that is something to consider. By the way, a 1031 is much less expensive. I mean, it's $1,500. So if you find a good deal, do a 1031. Like, we still do 1031s. We haven't done them in a while because the deals haven't made sense, but we'll still do them. And I would say the other part of it would be, on our side, the downsides for the trust would be a third-party unrelated trustee. That's our role. You have to get comfortable who that is. But by the way, if you've done a 1031, guess what? You've worked with a third-party unrelated group that held your capital for 45 to 180 days. In this scenario, it's kind of like a long-term 1031 that only does business with you. So you have to get comfortable with that whole scenario there. People, CPAs typically don't necessarily know how to do this or what it is until we explain it to them. So we've got to get them comfortable, which is fine. We usually about an hour call to get them comfortable. And then I would say the ongoing fees. So ongoing fees are about 1.5% to 2% recurring on the net proceeds. That's how we get paid. And typically includes a financial advisor. And then it's about a 1.5% one-time setup fee on the gross sales price. So more expensive for sure, but hopefully, we're unlocking the value. So it's really an investment and not an expense into your future, into everything you're trying to do.
That is awesome. Would you be like the trustee would be like your attorney or something like that?
So we're the trustee. We're the trustee.
You're the trustee. So you hold the
yeah, and you can't choose your trustee. That's the other thing. Like, it has to be third party unrelated trustee. And then there's a law firm who created this 28 years ago. Thousands of transactions, billions and billions and billions of assets sold using it. And then over about 30 no change audits. So we've never had a change or a finding. So we have a perfect legal track record. So they're the legal team. We're the expert niche trustee for this structure. Of course, you can have your attorney review all this stuff, and we're happy to educate them when they sign the NDA. But but yeah, that's basically it. And then you have a third party tax preparer that does the tax return for the trust. You have like Charles Schwab, third party. We can do financial advisor, third party. You have a lot of third parties that overlook each other to keep transparency and accountability. Nothing moves without your approval or your signature. All these things are all in place. All these controls to keep things safe and accountable are all in place. And people absolutely love it. It's transformational, people.
That's awesome. I know you mentioned a few, but give me your biggest real life success story on someone you helped.
Okay, yeah. So let's talk about. Let's talk about. We talked about Warren and Catherine. We talked about the San Diego deal. Let's talk about, I think, the $17 million Texas deal we just did. Okay, so this is 3 siblings that had a dream about 30 years ago. They bought this land, and they're like, they're farmers, and they're going to do some land farming, and they didn't know the land was going to go to $17 million, but they buy the land and they farm it. And then they almost lost the land because they couldn't come up with the property taxes at times. And they're arguing with each other, and, whose idea was it? And anyways, they stay together as siblings, and they fight through the adversity of all the years. And, all these years later, all of a sudden they're like, oh my gosh, they're building all these houses, and this, Texas is expanding. And, oh my gosh, we're right in the line. And they're like, boom, we hit the lottery. Right. And so they're like exploding with like excitement because this is going to change their family tree forever. And so, but guess what? There's massive capital gains taxes. And so they're like, oh man, I don't want to pay this tax. And I don't even really know quite how to invest the funds really as well. I'm kind of just a farmer. But if I could sell, defer the tax, and then get passive income, like I can literally retire and be like, done, like, and like, be free. And they're, living in like just a really meager home. And so long story short, they find us. We not only build the capital gains tax exit plan to defer all of the tax, give them an extra at least 25% working for them, but also help them to craft investment allocations with some of the best groups in the world and with real estate. And then now they're passively getting income, paying tax slowly over time. And I mean, they're just thrilled. It's changed their life. It's changed their family tree. It's given them total freedom for their time and their energy. And so that is Ed and his brother David. And they have a sister too who will also be using it on the second exit. It's important to understand that if you have partners, we can structure it where each partner can do the trust, or one or two can do it. She decided on her first tranche not to do it because her dream was to to build a primary home, and so that's one of the restrictions. If you want to use it for personal expenses like a primary home, that's taxable. So her first tranche of the exit, she just paid the tax, but the second tranche is coming up this year. She's going to use it for that amount. And so it's super flexible for partners that want to separate, and then also flexible for how the payments can be made. That's a really good win. It makes me happy to think about it. Yeah.
That is awesome. I mean, 17 million. Think about it. Like multi-generational. And a side question on this topic is that 17 million going to grow? Does it grow inside the trust? Like 17 can become 20, and then 20 can become 25, and then 25 can become, yeah.
Oh yeah. So we typically set interest rates for like 7, 8, 9, 10% compounding net of fees. So if you use 10% compounding as an example, you use the rule of 72, which states that if you can earn 10% compounding over 7 years, you'll double that money.
Yeah.
Right. So on 17 million, hypothetically, not that they're going to be taking payments, so it doesn't quite work. But in 7 years, we doubled the money. That's $34 million between 3 siblings.
Yeah.
Right.
Wow.
Now they'll be living off of the interest. So let's just say they live off all of the interest. Well, even if they live off all of the interest, if they took all 10% for 7 years, right, and they would look up and go, oh my gosh, like we literally, like we'll do the math here. 17 million at 10%, that's $1.7 million divided by 3. That's about $566,000 per year per sibling, and that's about $47,000 a month. So if all we did was earn net of fees 10%, and they lived off of $47,000 a month for 7 straight years, and they look up and go, our 17 million is still there.
Yeah.
So that's the power of this, right? Now, most people don't need or want 47,000, but it's their money, whatever they want. They'll probably cut that in half and just say, give me half of that and let the other amount accrue in their favor, right? And build up. And then they might pass it to their kids and, pay for the grandkids' college education or give to causes they believe in, whatever, right? I mean, it's really kind of up to them what they want to do with the money. They just pay tax on what they receive personally, or they might want to go buy some more farmland and they're getting oh my gosh, like if we did that with, maybe we'll buy these other tracts over here and we'll start working the business, or yeah. We have clients that build apartment complexes, that start businesses. We had a client who exited Bitcoin. She bought it for 50,000 and it went to 50 million. And we exited 5 of the 50 million at 54,000 a coin, deferred all the tax, and then she used 4 of the 5 million for a startup company like a Khan Academy. Her dream was to inspire and build educational online material for teenagers, right? That was her, and that's what they're doing. So using the capital to make a difference in the world. So these are the cool things. And guess what? Bitcoin went from 54 to like 68, then it dropped to 15. Now it's back up to like over 100, right? But just think about that, right? From the time it dropped from 54 to 68 to 15, we had already exited, deferred, and made an impact right now. And that's what I want to get to people. Like, don't wait on your dream. If you have a dream, you have an obstacle, and the obstacle happens to be tax or getting a team in place to help you execute these things, like identify that and then go execute on the plan. Like figure out the obstacle, figure out the dream, figure out what's the gap in between the two. Find the team, hire the team, execute on it. Like, time is too short. Our lives are too short,
So
take action today. Yeah.
I love it, man. I mean, it's mind blowing. The whole concept, everything that you're talking about is amazing, and you can start. What's the smallest amount you guys start with? Like, is there like a number that you say like, yeah, I won't work with you unless you have at least this much, or is there anything
back to
like
the $1
million
net proceeds, $1 million gain? I mean, people do come to us too for like real estate investing, and we're real estate investment advisors. So we work with accredited investors to help them build truly passive income plans, and then access our network and connections to invest the funds. So we have that, and so if you're an accredited investor and you have capital of at least 200,000. Then we can help you start to place some of that capital, right? So that's kind of separate from this, right? But as far as the DST is concerned, you need to have a qualifying exit, right? $1 million net proceeds, $1 million gain on a business, Bitcoin, crypto, or real estate. So those are some of the minimums.
Okay. I just wanted to find out if I would come to you and say, hey, I have $500,000 right now, you wouldn't be able to start with me. I need to get
Yeah,
up
I
to the
mean,
mill.
if you had cash to invest passively, yeah, we could help you absolutely. Yeah,
Yeah.
but it's not. So you either have just cash sitting ready to invest. You're not selling anything, any big
Well, I have
appreciative.
stocks. Let's say I have
Yeah,
stocks.
you
I have
can
a half
sell
a
the
million in
stocks.
stocks.
Yeah, we can public stock, private stock too. We can do stocks too. But again, each single stock would need to have about $1 million gain. So if you had bought Apple or Nvidia or something, and you're like, I got this massive gain. Yes, we could do it for that single stock. That's not a problem. And then we could help you invest the funds. Yes, and we could use the DST for that. If you said, Brett, I've got, $200,000, $300,000, $400,000, $500,000 across like 10 or 15 stocks that I want to sell and invest passively. Yes, we could help you with that. That wouldn't be using a DST. We would just help you place the capital.
Sorry, I'm taking notes now. I don't usually take notes, but I'm taking notes on this
Good, good,
one.
good.
Capital gains rising and everything. Proactive steps for investors, besides the DST and other things. Like, what do you see in the future? What's coming up?
The new administration came in and they're very business friendly and real estate friendly. I think they're going to be like they were last time. I think they're probably going to bring back 100% bonus depreciation. It's down to about 40% this year, I believe. So they'll bring that back. I don't see the 1031 going anywhere.
Do you see
Yeah,
more? Do you see more? What is it called? Opportunity zones coming out?
no,
No?
I feel like that's a lot of hype. I didn't really actually see. I mean, is it real? Yeah. Did it work? Yeah. But I mean, a lot of those deals were gobbled up in the first couple of years that was announced. And
I
and
own
I,
some. That's why.
yeah, and if you would have bought the project anyways, and the project's going great, and I mean and you can hold for 10 years, like
Yeah.
dude, they're awesome, man. Like, so I don't want to knock them. I just think they're just a lot of people want flexibility and they want cash flow now. And like that's what's most important to them. It's not just 10-year thing for benefits. It's like right now, if you can change my life, let's go. Right. If right now you can get 20, 30, 40, $50,000 passive per month, let's go. It changes my life. It helps me to give, helps me make an impact right now. Like people want right now. They don't want to wait. So that's the beauty of the DST. It's like we change people's lives as soon as they exit right now, not waiting for 10 more years for something to happen. But by the way, the DST itself could turn around and invest into that opportunity zone, a portion of that. The other problem with the opportunity zone is typically you're going all in on that one deal. Now, one project, all in, and you're like, it's not really producing any cash flow right away because they got to build the thing and it takes 2 or 3 years to get cash flow and refi out. And
Per se, like in Daytona, we had already. I got a fourplex over here that's in an opportunity zone. Yes, I went in, I renovated it. It's renting. It was rented for 1,200 when I bought it. Now it's making 5,000 a month. So that's in a 5-year period. I basically 5 times the income on the property.
Nice.
So that's pretty decent. And I'm holding off for the 10-year to come because supposedly it's capital gains free after 10 years, and then I'll have a big lump sum to play with.
Yeah.
And in 10 years, if you add the extra payments and et cetera, you pay down the loan pretty far away.
And look, if you're doing a deal where you went from 1,200 to 5,000 a month, like that's a sweet deal. I mean, you do that deal no matter if it's opportunity, 1031 or none of that. Like you just do the deal. Like that's just a great deal. So I agree. And if it happens to be in Oz, hold it for 10 or maybe hold it forever. Like why did you ever really want to sell it? If it's a good deal, like, forget about getting the gain at that point. If it's cranking there. Now, of course, you need to do an ROE. Like what's the value of it at that point or where it's even right now? And if your ROE is 3 or 4 or 5% return on equity, and you can turn around and throw it into the DST and you can get a 16% return on some of the lending that we're doing and you get 14% net, then you go, okay, does my 5 turn into 10?
Exactly.
Per month and I do nothing. Like, oh, let me just sell now versus waiting 10 years to get this capital gains tax free to do what? To turn around and put it into something that's producing 10K a month, right? So again, like, can you just speed it up? Like clarify what you really want, Lancelot, right?
Yeah.
Like, and don't fall in love with like, I love the idea of capital gains tax free in 10 or 11 years. Well, who knows where the values are going to be in 7, 11 years, right? Maybe it drops, right?
True.
Like fall in love with what you want right now. Like what's number one for you right now? And then go, well, is there a way to get there right now without having to deal with anything else for, another, 5 or 6 or 7 years to hold on to it? And then if the answer is yes, then do it now. Like that's the point of all this.
Yeah, for sure. Hey, What's a common misconception, about tax deferred strategies that you'd love to clear up today?
Yeah, so it's too good to be true, right? Like everything we're saying, my CPA hasn't heard about it. My broker, why doesn't my broker tell me about it? Well, guess what? Your broker either doesn't know or doesn't want you to know. This is the secret because they want to keep you in the 1031 exchange because that's how they get paid. By the way, I'm a California real estate broker. I've sold over $500 million of real estate or DST transactions. So I totally get it. I think Lancelot is that too, right? So he would probably say the same thing. Like most brokers want to keep you in the 1031 exchange, and so do the 1031 exchange companies. That's how they make money. You can't blame them. Okay. So that's number one. Like, it sounds too good to be true. Why isn't my broker and my advisor tell me about it? Well, they just don't know. But here's the reality. Once you educate the brokers and you educate the advisors, they 9 out of 10 all join us. They join us and then they're offering it. So that would be number one. I would say I just want to clear that up. And then there's like, yeah, just don't fall in love with, don't trade what's profitable for what's priceless, right? Like don't trade the time that you have with your kids or the travel that you always wanted to do, and don't trade what's unique to you for something someone else can do, right? Like I have 5 kids and we're traveling to Uganda here in a couple of weeks, the whole family to do some mission work, which is going to be great. I'm going to Guatemala next week with my oldest daughter. We're going to do a month in California, Montana, South Dakota, North Carolina in June. We did a week in New York, a week in DC. Like we homeschool kids. Like we
Nice.
basically said we want to spend 1,000 extraordinary days in 100 unique locations with our kids before they're 18. And we set a date. We moved out of California, got to Florida, and we've been living our dream for 2 years. And it's like the best decision we've ever made. Like we're not waiting for the thing, right? We're just doing the thing. So don't trade what's unique to you for something someone else can do. Spend time with your kids now. Do the thing now. Time is short. And if the property's getting in your way, sell the thing, right? Now, if it's funding all of your freedom, then phenomenal. Do that, then keep it. Like so, these are things you've got to be intentional and you got to be thinking about and you got to execute on them, right? But I think too many people wait, or they get caught in fear, or they get caught in like, they don't allow themselves to dream and go there, right? And just remove the obstacle. So this is 80% mindset. We can talk tactical for 20%, but it's mindset and discipline and execution.
Yeah. Brett, any advice for like smaller investors like myself, how to scale to the point where we can do a DST faster? Some kind of best advice for tax loopholes and lower the tax burden and all the other stuff.
So you said 2 things there: scaling a business, or that's you grow the business big enough, right? That's so you can read Dan Martell's book. It's called Buy Back Your Time. And I hired Dan as my fitness coach, and I'm going to get him as a business coach. And so this is a great way to scale your business so you can prepare to sell. You could try to hit some home runs with some crypto. Like I just started to go into like primary markets within cryptocurrencies. Like I made most of my money. My expertise is real estate, but I'm hiring these experts that know how to buy on the primary markets, and I'm taking some calculated risk for some maybe 5 or 10x returns to speed up my truly passive income plan for my wife and I, our family. So look at some of those kind of opportunities. And then I would say. Yeah, you gotta get a team. Like, you got a team to help you on this stuff. Like, you don't want to be doing the stuff that drains your energy and it's not income producing. You want to delegate that out, and you want to only be doing stuff that gives you energy and is really revenue driving. So that's a big thing that I'm learning from Dan.
That's awesome.
Martell.
That's great advice. What do you think about XRP?
Yeah, I own some. I have clients that own some. I own some, and that's a
everybody at the gym talks about XRP right now. When everybody talks about it, that's when okay, if everybody's talking about it, that might be a good time to get into it. Because if your gym partner is giving you advice on how to buy crypto, you get where I'm coming from.
Yeah, cryptocurrencies between investing in the casino, right? So just be aware of that. Like some of these are going to go to zero, and some of them are going to go to the moon. And if you're willing to have that risk tolerance and put that amount there, I would focus like a laser to get to truly passive income as soon as you can, because that really changes the game. So how we do that is through debt investing and earning about 16%. This is what we do. And so it's like the model. If I can put 500 in every single year for 4 years, it's going to produce about 25,000 a month on average. and boom, I'm done. Like, so figure out what that truly passive income number is. Is it 10? Is it 15? Is it 20, 25, 30? And then reverse engineer, like where could you have durable, consistent, you can sleep well at night type of returns. So you deeply understand the investment and the cash flow, and they have I want a perfect track record. I don't want you to ever have lost a dollar, never missed a payment on time. Like, I understand the business model. That's where I get certainty of conviction. And that's literally our model. And this is what I teach people how to do. And then, go do that. And then just focus like a laser on that one thing, get that done. I think people get in trouble as they, crypto, real estate, this, like all of these 10 things. And it's like, well, get really good at one thing. Like, I got really good at real estate investment advising and investing. And I got the 10,000 hours in, right? I got really good at the DST, got the 10,000 hours in, and I'm starting with the crypto, right? Yeah. And I've done it for a couple of years dabbling, but now I hired like coaches to teach me, and I'm taking these things, but I've established this other piece of the wealth that's already healthy and growing. If you don't have that and you're just dabbling in like the crypto, like just be aware, like that's probably going to be, higher risk. Like this is, but it could still go great, And so I got clients that made, 50,000 to 50 million. Now it's over 100 million in Bitcoin, one client. So I'm learning from those people, right? I'm like, what do you think? Right. And I've got 4 others that we've done, Ethereum exits. We did a checks exit last week for 1.5 million. Is that making sense? So yeah. I try to lean on personal relationships or certainty of conviction for investments. I started with real estate and then I moved my way to other investments, but my main one will always be real estate.
Yeah. So you get these personal relationships throughout the years of experience you've built. That's what I'm telling to our listeners here. So, guys, he's saying that he relies on his personal friends and colleagues, so-called,
and hire the coaches, right? Do the masterminds, read the books, right? Consume the content, and then take the action on smaller amounts and work your way up. Like it's like a muscle. Yeah, you got it, Lancel. Yeah.
And you build those relationships throughout the years of devoted work on whatever you're doing really well. You were in real estate investing. I mean, that's a great thing to be in. I'm dabbling around the commercial real estate street. I've sold some bigger deals. I've done some deals, and I'm like, my wife keeps on telling me, like, why aren't you doing commercial real estate? Like, you do residential, you're really good at it, but look at the numbers compared from one to the other. Like, you're selling $300,000 houses, you're selling $3 million properties over in commercial. Like, you do those deals and you know how to do them. And why don't you just focus on that and start doing bigger deals, to scale the business, in a certain way. And
I left Keller Williams and I joined Marcus and Millichap, and that was my idea,
Yeah. So they teach you well, don't they? Over there, Marcus? Yeah.
Oh, phenomenal. Yeah. Some of the best training. Yeah. No, I love commercial real estate. That's how I got started with brokerage and all of this stuff. So yeah, I think your wife's thinking well, and at a certain point you got to, you take the bigger swings and you got to grip the Band-Aid and just go for it. And you give yourself a 2-year window to say, okay, I'm going to focus like a laser, refer all the residential stuff out, and then focus like a laser on commercial. And if I can, make at least what I made on average for 2 years, even though it takes you 6 or 12 months to get the first one going, then go for it. Right. And it gives you life and energy to like be on a bigger stage on that. Go for it. And like, same thing with starting a podcast or a YouTube channel, like do it. Like, why not? Like, why not? I'm starting a media company. I'm gonna have a guy walking around following me with a camera. Do I really want to do that? No. But did Dan Martell do that? Yeah. And did he tell me to do that? Yeah. And like in Russell Brunson, yeah. And I'm like, okay, well, give it a shot. And I'll do it for 2 years. I'll hire a guy for 80 to 100K a year. We'll do cameras and we'll create a media company and we'll see if people watch and do it. And if not, didn't work. It didn't work out, but I'm going to give it a 2-year commitment and go all in on it. And I think it's going to 10x the business, which is,
it opens up so many doors when people see you, it's insane. Like, oh, I've seen you on that podcast, or I've seen you on whatever, and social media, and you're shaking hands. I'm like,
the doors, but really, it opens the doors to change people's lives, right? Like even everything we talked about today, like I didn't know this stuff until I knew it. And then it changes other people's lives. And then everyone hears this, they know it, and they can change their life and help people. Like it's just getting over the fear and the clunkiness of being on video, and then it's like just going to help more people, like saying like I just care about helping more people and serving them than whether or not I look funny or sound funny on podcasts and YouTube channels and stuff.
Yeah, I know that was my first fear too. I basically took this on myself when I went to Business Mastery with Tony Robinson. He's like, you got to do video, guys. Everybody got to do video. That's how you scale your business. There's no other way. And that's when I started doing videos and reels and all this stuff. And I'm like, holy moly, this is so weird when you're first, trying to say something on a camera and it doesn't come out. And like, that you're talking about real estate and all you do all day is talk about real estate and you can't say a word in front of a camera. It's like, whoa, this is so weird. But you can conquer that and you can get through that and it becomes more natural the more you do it, the easier it becomes. So
yeah, Russell Brunson's talking about the hero's journey, right? And every chance we were like in the ordinary world, and the ordinary world is like, you're walking around and things are pretty normal and ordinary because that's your world. And then all of a sudden you get this call, like it starts to pull you in this direction to make a bigger contribution, right? And to help and serve at a higher level. And you have a choice at that point. You can step out in faith and go for it, even though it's going to be, challenging and scary, or you can stay in fear and just kind of shrink back and not become that person that the people are, and the calling is calling you to be, right? And so, yeah, I believe the Lord's given us an opportunity to steward these kind of callings and these opportunities, and AI, technology, content creation. It's here, right? Like do we steward it and step into it and embrace it? Or do we, shrink back and, just stay in the ordinary world? And that's, I don't want to be ordinary and I want to help more people. So I go for it and, let's see where the good Lord takes the efforts, right?
So where can our listeners connect with you to learn more and take advantage of this, your tax saving strategies?
Yeah. So a couple places, like if you want to connect with me, like personally, or my YouTube channel or all this stuff, brettswarts.com is the best place for like all the things. If you have a specific exit coming up, like a big, $1 million plus exit, you can get the book, Building a Capital Gains Tax Exit Plan. If it's like imminent, like I'm happening this year, then you need to get onto our website, capitalgainstaxsolutions.com, and you need to book a one-on-one time with myself or one of my team members. But this book, by the way, is a pretty cool book. We got Kevin Harrington from Shark Tank in the book. It's an Amazon bestseller. And we've got really smart real estate people, and we've actually got Tony Robbins CPA in the book too, which is pretty cool. Yeah.
You see.
Tyler McBoom. McBroom. Yeah. So
I'm going to drive up for a signed copy. Okay.
Yeah, absolutely. No, you send me. Yeah. You send me your address. I'll just send you a copy. I don't, it's just been too enjoyable to be on your show. So, but that's basically it. I'm happy to help all the people out there and share this with your friends and family and people that, that have some big exits maybe coming up.
Thanks, Brett. Brett, this has been an absolute masterclass in tax strategy and wealth preservation for those tuning in. If today's conversation sparked an interest in securing your wealth and keeping more of what you earn, make sure to connect with Brett Swartz. Head over to his website, capitalgainstaxsolutions.com, to book a consultation and start optimizing your investment strategies today. And don't forget to follow Brett on social media for more tax-saving insights. You can find him on Instagram, LinkedIn, YouTube, and his expert Facebook community. Link is going to be in the show notes, so you can find all his links in there. If you found this episode valuable, hit that subscribe button, drop a 5-star review, and share this episode with fellow investors. Stay tuned for more high impact real estate strategies right here on the Real Estate Roundtable. Thank you for joining us on Sir Lancelot's Real Estate Roundtable, where we've unveiled the mysteries of real estate together. Remember, in this kingdom of possibilities, every dream home is just a discussion away. I can help your real estate dreams come true. Just call me at 786-449-7518. Until our next roundtable, may your ventures be prosperous and your homes be filled with love and joy. Farewell, fellow knights of real estate.